Hello, everybody, and welcome to another edition of Investing Education Academy with myself, Brent Simpson, and Leon Noble. We are the co-founders of Investing Education Academy, and we know all of you all have been thinking, okay, is this market about to run? Is it about to run away? What's going to happen with the economy? You know, it's a lot of things going on inside of the market. So we're not going to focus on all of them today, but we are going to talk about what seems like it's just been everywhere on social media: gas prices in the United States. So, I mean, I've seen people say they're getting rid of their cars, everybody's going electric. Um, this is ridiculous. This just a million things about gas prices. And, we'll say this, as you look at what gas prices are doing in the US, you have to think there's a price for the luxuries that we have in this world. And high gas prices is one of the things right now. It's a cost for the luxuries that we do have. And it's a stable government. We have an ability to kind of create the future we want for ourselves, and it comes at a cost. And at this moment in time, we are seeing gas prices go up, and we don't know how much longer they will go up. Yes, that is my mother. So for everybody who's like, in this space, we really have to focus on a few things. Is what's the trickle-down effect? And what will that mean for, other costs of goods? And for those of you all who, are thinking, I've been wondering the same thing. Leon's going to tell you why we chose this topic while I do a little bit of housekeeping.
Yeah. So like Brent said, gas prices are kicking everybody's butt, left and right. And that's one of the costs, kind of like food, that we really can't avoid. Right. So like I heard this guy on TV the other day say that, the one thing people can't change is their commute to work. Right. Their distance driving to work, like that's fixed. Right. So it's not so.
Whoa. I had a. That's not true, but okay, I understand what he's saying.
No. I mean, it's a fact. If your job is 3 miles, if your job is 20 miles away, your job's 20 miles away. I mean, that's just fact, right?
Get a new job.
Huh?
Get a new job.
That's easier said than done.
Buy an office building close to your house.
That's easier said than done.
But it's doable.
It's doable. Yeah.
Just plan around everybody.
Yeah. So generally, if your job is 30 miles away, you can't avoid that, right? And so you have to fill up your tank, which now is almost, some people's almost as much as their mortgage, depending on the size of their car. So this issue with gas prices really affect everybody. And what a lot of people don't know is that the inflation that comes from oil. So oil is the main input into gas, right? So the oil, if you ever, again, if you're deep into finance, if you check the oil futures, that'll kind of show you where gas prices are going to go. Right now, oil futures just hit $130 yesterday, where last year oil futures were around between $40 and $60. So they've more than doubled the last year, which is why remember, oil is the main input into gas, which is why gas has gone through the roof. But people don't realize that oil goes into just about everything: plastic, rubber, even some wood products, like you name it, ceramics, you name it, whatever. A lot of, even some of our medications have certain levels of oil in it. So oil goes into everything. It's like the input, almost one of the main inputs into everything. So we're seeing this across the board. We're seeing this in every, again, flights, cars, staples, food, medicine, everything's going up because oil goes into just about everything. And so we want to cover this topic because we've been talking about inflation for the past 3 or 4 months, but it seems like oil. I mean, gas is really irking people right now, which we totally get. And kind of another spin I want to put on it is it's not just oil. There's another input that's really causing inflation hugely, and that's what they call wage inflation. So right now, I wrote the stat down. So right now, there are a record 11.3 million job openings in this country right now, the highest in the history of the country. So what does that mean, right? So what that means is there are not enough workers. So the reason that many jobs are open is because these employers cannot find enough workers to fill those jobs, right? So what does that mean? That means it's an employees market. So you can go to this one company here and say you want 50,000. then goes other company over here and say you want 55,000, and you can play them against each other because both of them are bidding for your services because they need workers, right? They need to fill all these 11.3 million jobs that they cannot fill. So wage inflation is a huge cause, along with oil and gas, it's a huge cause of inflation right now, and one where so here's another point. So the oil gas inflation we're seeing will moderate at some point, right? It'll eventually stall and kind of come down because oil prices will soon drop once all this craziness goes away. But wage inflation may not go down because there's a thing called the Great Resignation that's going on right now. It's where people, workers like us, people that work out in the economy, we know that there are 11.3 million jobs, right? So we know we can go over here, ask for this much, we can go over here, ask for this much, and have them bid against each other. So as long as there are these huge amount of jobs that are open and they can't find enough people to fill them, wage inflation will persist. So even once we solve the whole thing with oil and gas, we probably won't solve the wage increase inflation issue for maybe another couple of years. So just a tidbit I want to throw out there.
And we brought this topic up because we talked about it when it dealt with COVID, and everybody was talking about inflation and just how we will fare in that environment. And Leon and I consistently said it's not just inflation that you want to look out for. The COVID increases didn't come down, and when you think about how this just applies to everyday the mom and pop, when you look at, let's say, eggs, for instance, or milk. In this case, let's just go with eggs. You probably could have gotten a carton of eggs for maybe maybe $1.97, even depending on where you're going. At this point, during COVID, eggs shot up to like $4.25 for that same cart. And so post-COVID, or as we see COVID get under control, the price of eggs will come down to like $3.69. That's still over 60% increase from where it was pre-COVID. So when we look at what's going on right now, the trickle-down effect is, as we are in this overall inflationary environment, as we look at gas prices rise, who uses gas? Is it just everybody commuting to work? No. You're talking about people who are taking flights to go wherever they need to go or want to go. You're talking about truckers. And so let's look at truckers. These 18-wheelers that you see going up and down the street. What are they driving? They're driving medicine. They're driving consumer discretionary goods. They're filling up the stores at Walmart, at Target, Costco, BJ's, wherever it is that these big box stores, they're driving these goods to them. So the cost of food travel costs go up. And if any of you all have ever looked, that's actually a thing, food travel time and food travel costs is something that's tracked pretty closely. All these things go up. And as they go up, it's very likely that the prices won't go down to pre-inflationary prices. They may go up, spike, and then come down slightly, but they'll probably still be higher than what they were before. So just keep that in mind as you prepare, where you're holding your money, what you're doing with your money, how you're investing your money. And so, Leon, you want to touch on the importance of putting your money in the right place?
Yeah. So I just want to touch on another kind of real world example of this. So get another stat. So everyone who's followed us knows that inflation is running about a 40-year high. We haven't seen inflation this high since the early 80s. But here's an actual number, right? So a household that earns $70,000 per year, which is pretty good income, because of this current inflation, it's like adding another bill of $200 per month to their bills or debts each month. So again, a household that makes $70,000 per year, because of this inflation, and it's not an actual bill, but just because all the amount they're paying for all these different goods, it's like adding a bill every month at $200. That's a lot of money. That's a big chunk of change over the year for nothing, for something you're not even getting anything for, right? Like you're still just buying, food, you're buying gas, you're buying clothes, you're living your regular life, but it's adding extra. It's like adding an extra bill of $200 per month for an entire year from this inflation that we're experiencing. So the reason we're talking about this really is because, so let's get down to how do you solve it? So basically the point we're making is that inflation is not going anywhere. Well, it's not going anywhere anytime soon. right? I mean, the economists are saying we'll probably see this level of inflation for the next year to anywhere from people. They're saying anywhere from 1 to 3 years at these like high levels. Now, again, that was all reported before the war in Ukraine and what that's doing to oil and pushing up prices. So that's kind of an anomaly. But the stats is that they're looking for about another 1 to 3 years of this level of inflation. So we're really stressing this point is because, as Brent said, like things didn't even come down from COVID, right? Like we're kind of moving past COVID now. Prices didn't moderate. Now we have this war, which is pushing up prices of everything. And who knows when that'll moderate, right? Who knows when those will come down? So it's really, really, really important that you have your money not again in those savings accounts or those things that are paying you no interest. Just a quick story, a real world example. Again, today talking to my mother, and she had a retirement account at what is the credit card I use?
Chase.
Capital One. She had a account with Capital One that they had sent her something before saying, hey, we're gonna like move this account or something. They were gonna do something with this account. But she was like, okay, I never got it. She called him up, was like, I never got information about this account. Where is it? Where's the money? And they were like, oh, it's over here in either a savings or like a money market account. I think it was some sort of savings account they had. And she was like, well, how much is it paying? And they told her it's paying 0.01%. Again, big. What's the bank I said, Brent?
Capital One.
Capital One. I keep wanting to say Chase. Capital One, big Capital One, huge publicly traded company. They're paying on this particular savings account 0.01%. My mother, she just laughed. Right now, I laughed with her, but it was like, I mean, I knew it, but she was kind of like stunned by it. And I've been preaching to her like this is what's going on in the world, and she finally got a real world example with her money earning nothing, zero, essentially nothing. Right.
Hey, don't talk about my mom like that.
Is because this is not going away anytime soon. The supply chain stuff is not ending anytime soon. Gas prices will remain high, relatively high. They'll remain really inflated during this war. Even after this war, prices were still rising anyway because we're coming out of the COVID shutdowns and all this demand on oil. So again, reason we're saying this is that we're stressing it once again. Inflation is not going anywhere. It may get worse over the next couple months before it gets better. But that's what we always say. You have to get your money out of savings accounts, checking accounts, money market accounts, CDs. Bonds. Treasury bonds are becoming a little more attractive because rates on Treasury bonds now are about 1.7%, which is close to. Remember, inflation is typically 2 to 3% per year. Treasury bonds now are at 1.7, so they're approaching what typical inflation is. But again, inflation right now is like 9%. Not in
typical inflation right now, though.
Yeah, I'm saying inflation right now is like 9%. So
yeah,
treasury bonds are of no use to you. So we're just stressing the point that inflation will be here for years to come. And if you were thinking that maybe you could kind of weather this whole inflation thing and kind of move past it, no, that's not happening. Inflation is going to remain high for the foreseeable future. And again, we're going to stress, please get your investment dollars out of savings, checking, money market, CDs. And one last point I want to make. So I've been seeing like memes online that are hilarious. And they're like, oh, you told me to put my money in the stock market. I put my money in here and now it's down here. And you were saying this was going to help me, save money when I've essentially lost money. And that's a fact, right? If you started investing in the beginning of this year, you're down about 15 to 20%. But again, that's a short-term view, right? If you're looking just at a 2-month snapshot of the market, that's what we try to steer people away from. Remember, we always say 3 to 5 years, the minimum time in the market. All of us right now, my account's down, Brent's account's down, everyone's account is down this year, and it may be over the last 6 months because the market has just gone through this topsy-turvy time. But over time, we know that the stock market returns 10 to 12% on average per year. So those memes are funny in the moment, but they really have no relevance long term. So that's kind of the answer to, well, you told me to put my money in the stock market, I've lost money. Yeah, so have I. But I've been in the market 30 years, and Brent and I have been through many of these, and we know over time, again, it's going to come back and we're going to earn a whole lot more than we put in. So just want to make that point.
Yeah, and if any of you all have questions about what that looked like, listen to our podcast. Was it last week or the week before, where we talked about what happens when you miss the 10 highest yielding days in a given year of investing.
Yep.
10. Just talking about 10. And this is an article that we pulled from Motley Fool, who did a lot of research, and they pulled their information from, I think it was TD Ameritrade and JP Morgan. So these is not like Leon and I just guessed. And we go through the article line by line with you all to shows what happened. That shows what happens when you miss the 10 highest yielding days in the market. Oh, I mean, one even broke down what happens if you miss 10 of the highest yielding days in a 10-year period, 10 years. And it was still like mind blowing.
Yeah. So, and today was a good example, right? So the market today was up. The Nasdaq tech stocks were up about 4%, and the general market was up about 2.5%, right? And for the general market, those are huge gains. Now, had you panicked and sold, last week at the near what could be the bottom at one of the lows, you missed out on a huge day today, right? Today was actually my biggest day. Just actual absolute dollars returns. Today was my biggest day. Now I'm still down for the year because the market's been down, but today was the biggest chunk of money I made for the 1 year on any given day this year, because again, I know what happens, right? The article pointed out last week, a lot of the biggest up days come after some of the biggest down days, and we had the Monday of this week was the largest down day since October 2020. Monday. So in about a year and change, Monday was the worst day for the market. Now today was one of the best days for the market in 1 year. So again, we made the point that if you miss these, if you panic and pull out, you can miss these big days.
And Leon, let me give you all real numbers for while you were talking. On my other screen, I pulled up one of my accounts, and this September, this account will be 2 years old. 2 years old, right? Again, I'm saying that again. 2 years old this coming September. This account is down $91,000 in value. And I want to caution us to use the word loss and just say down in value if we didn't sell, right? So it's down in value $92,000. So what does that mean? That means instead of making $150,000 on this account that's 2 years old, I've only made $62,000. So
in passive income.
Yeah, so I am down $91,000. So these are real numbers. I'm looking at the account. And if you have done any of our hot seat, I've actually shown you all this account. So, anybody who wants to see what's in this account, you can go revisit the hot seats to where you see me and this account is in there. And you'll see, I think at that time, the account was up it was up like 120,000 at that time. So again, my point is this: you're talking about an account that's down $91,000 roughly, and I'm still up $62,000. So when you see those memes, you can be an idiot if you want. And I use that word. You can be an idiot if you want and think that, oh, yeah, I'm so grateful I stayed in this savings account. I'm so grateful I stayed in the savings account. And you wouldn't have lost anything. You would have lost no money at all. And I'll take this every day. So
right.
Every day.
And actually they would have lost because they would have lost buying power had it just been sitting in a savings account. So yeah, your money would have still been sitting there. Your 100,000 still would have been sitting there in the account, but the amount of goods you can buy would be down by almost 10%. So you've lost buying power, not necessarily money, but as Brent showed, in 2 years he was up 60 some odd or 100 some odd percent, or 100, how much were you up?
The highest I was up 150,000.
You up 150,000, right? So now the market has corrected. He's still up
$62,000,
60 some odd percent, right?
That's $31,000 every year,
right? And for doing nothing, just well, I mean, of course you did your research, but once the money's in the account, it's passive, and you cannot get that in these savings accounts. You cannot get that in these checking accounts, these CDs. You cannot get that. So again, we just want to stress that inflation is here to stay, not forever, but for most likely another year, maybe 2 years. And in that amount of time, if your money is still sitting in these accounts that are not earning anything, you will be losing buying power day in, day out, year in, year out. So we just want to stress inflation is here. Inflation is not going anywhere. Oh, and another thing another point I want to make is that this war is actually probably going to make for two reasons. War is probably going to make inflation persist for two reasons. One, gas prices, right? Oil, because Russia's a major producer. Oh, 2 points. So people don't know this. Ukraine is one of the largest exporters of wheat on the planet. Wheat, like goes in bread.
Wheat goes in everything.
Yeah, if you look at wheat prices, I mean, they're literally to the moon right now, through the roof. And so they're one of the largest wheat exporters. Russia is one of the largest oil exporters. So now you have these two countries are warring. A lot of these things are going to be shut down. We have sanctions on Russia for oil. Ukraine is not going to be able to plant as much wheat this year because of the war. So even if the war was to persist or even just kind of cease, maybe it was like a ceasefire and they were talking, things are still going to be bad because Russia will still have sanctions, and Ukraine won't be able to do anything because the country's war torn. So inflation's here to stay. So we need to really, 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 really get out of the mindset of, oh, this is going to end soon. I can get out of this topsy-turvy market. I mean, you can if you want, but again, over the long term, if your money's sitting in things that other than things like the stock market, things like real estate, entrepreneurship, maybe even like things like precious metals, you're going to lose buying power every day, day in and day out.
And also, too, let me just for, again, real world scenarios, somebody asks, well, how much did the account start with? This account started with $190,000. So that $190,000 in 2 years has earned $62,000 in 2 years. And it's not even 2 years yet. It's not 2 years until September.
Right, and it was almost double that.
Yeah, almost double. It was in the 300,000 total account value at one point. Now it's down to 162,000.
Right,
like,
and a good thing that, again, being a smart investor, you have been buying quality companies during this dip. So in the next year and a half, maybe 2 years, he was up, over 100%. He may be up over 200-300% in the coming years once all this craziness goes away, and he bought quality companies at lower price, essentially at discounts. So yeah. So we hope that, and we've been preaching it since November. One, get out of high valuation, non-profitable, and buy name brand profitable companies. We know Microsoft's, Amazon's, McDonald's, Pfizer, you name it. Things that are brand name company, profitable companies, and a lot of them pay dividends too. So I've definitely seen the results from my paring down my account. Again, I'm still down. I mean, you can't help that. The market's down, but I'm down way less than I would have been had I stayed in a lot of those high valuation companies. And today, being the biggest day, my biggest dollar amount made for the year, also speaks to the fact that I pared my account. I'm now on more quality because remember, big money right now is moving away from those high valuation non-profitables to the more stable companies. So I'm seeing the benefit of that.
And also, too, for you all who are like, well, I'm going to save my money by going out and buying an electric vehicle. We're not saying don't do it, but I can tell you this. If I had to buy an electric vehicle, I prefer the stock market buy it for me than I actually use my own money. So if I pulled out just the profits alone, I could buy almost any electric car in the market for cash with the money I've made in the market. So you all talking about these, gas prices going up. If you're investing properly, you wouldn't care. You'll care, but it means a lot less when you know your money is your employee and your money's going to go out and make you more money. I didn't realize gas prices went up until I talked to Leon. And I told him, I was like, I had no idea how much I was paying. I just pay it and I just move on. And it's because we have other investments that work for us that doesn't matter to me. And it's like you all think it's because you all, this is what you do. It's because we chose to put our money into a place that's going to make us more money. Therefore, we can live our lives a little differently. But I can promise you this. I drive a Tahoe. So anybody knows the Tahoe. It's like one of the biggest SUVs you can drive. And the gas price is really, I'm going to use my entrepreneurial, platform, and I'll make more money. And I'll make enough to cover gas. And then enough where if I need an electric vehicle, I have the stock market buy it for me. I'm not going to use my own money. That's crazy. Who uses their own money? So it's just understand I'm saying this today because, and I'm showing real world numbers. I'm being comical with it, but at the same time, there's a lot of truth said in jest. you have to use your money as an employee, not as if you're the guard of it and you're protecting it with everything you have. You're standing there with your rifle at the front door and nobody can touch it. It just has to stay in this one place. That it doesn't work. You gotta send it out into the world to work for you. And if you don't, you're gonna be the people putting up these memes talking about ha ha ha, look at the stock market. I would love to see their accounts. I would love to pull up their account. I'll pull up any of my accounts and we can compare dollar for dollar. How much has your money made you? And I bet you that meme won't look so funny in the end. Like,
yeah, and those type of memes are very short-sighted because again, basically the way they're looking at it is almost like day trading, right? So if you got in the market in January, yeah, you're down. Okay. But if you're smart and you know how things work, you're going to be in the market for 3, 5, 10 years. Right. So and if they knew what they were doing, they would actually be buying more of Microsoft, more of Apple, more of Pfizer, Home Depot. These things are down 30-40% off their highs again. And a lot of us went through this, a lot of us are new, but a lot of us went through this during COVID. A lot of people that are watching this now entered the market at its most depressed time. COVID, the market dropped 35% in 30 days, the largest single drop of the stock market ever. And you all went through that. Right now, we'll say a lot of the newbies got really spoiled because they bought the bottom and it went straight up and they figured, oh, this game is easy. Well, no, because they actually missed the drop because they weren't in the market then. Well, no, this is what happens, right? This is part of the market. But again, as we said, the markets stock charts go bottom left, upper right, with a lot of wavy, ups and downs in between. But they eventually settle higher. Oh, another point I just want to make, last point, is that the fact that the U.S. economy has 11.3 million jobs open tells you how strong the economy is, right? And as we say, the stock market is a reflection of the U.S. economy. Now, you might say, well, the U.S. economy is strong. Why is the stock market down? Well, it's not always one-to-one, right? We're coming out of a pandemic. We have a war, and we have runaway inflation, right? So these things are going to add some, bumps and curves to the market, like they did during the Great Depression, like they did the credit crisis, like they did during 9/11. Like all these things were shocks to the market, but eventually the market settles down and follows the economy. And so that's where we're at right now. We're in one of those bumpy periods, but this will end. This will eventually end. I mean, we all see it now. We're kind of coming out of COVID, right? We ran into this war, which is annoying, but that will eventually at some point subside as well, and the market will settle higher. So, and hopefully, I mean, I don't know. I'm not calling a bottom at all, but I hope today is the day, because today the market was up huge, but we'll see.
Yeah, but either way, we're in it for the long haul. So for any of you all who are part of the IA community, Leon and I have been, putting up information, and there was a stock recently that made an announcement that's going to change some people's whole outlook on the market. And we're going to talk about it in the platform, and you have to be in the platform to have gotten this, I'll call it earth shaking announcement. And if you're a part of our community, you're really happy right now. That's all I can say. If you're thinking about joining the community, that's your choice. So, with that being said, we owe you all two things, and they are stocks. And so stock
or crypto.
Oh, in the crypto market, that's a whole nother thing.
Yeah.
If you're not part of our cryptocurrency conversations, you think that's 62,000 or something. Yeah, that's nothing. But I don't know. It's just everything's like putting us in a happy place. But for those of you all who want to know what the picks are going to be, you can go over to our Facebook group, check the pick. And for those of you all who are thinking, well, I want both of them, not just one of them, you have to join the platform, join our community, and you'll be able to not only get our 2 stock picks, you'll be able to see our portfolio of picks that we've been choosing since we started this. So we look forward to having you all join the platform. We're growing every day. We're adding new functionality every day. And for those of you all who have written us testimonials, thank you so much. And again, just go to www.investingeducationacademy.com and go to the testimonials page, and you can see what real people are saying about their time spent in IAA. There's not Leon and I's words, it's completely their words. And if you look through the site, we use you all's testimonials all throughout the site as our content. And so instead of using like these stock images and photos, we actually used your testimonials. So thank you so much. You can see that we used it. It didn't fall on deaf ears. So we look forward to getting your input on what you think about the new site. Leon, do you have anything before we go?
Yeah, no, just get used to inflation. Get used to these get used to these high prices. Gas is going to remain high. Food is going to remain high. Please get your money working for you. Like, if you're hoping this is going to go away, it's not. Inflation is not going away anytime soon. It may not remain at a 40-year high, but it will remain elevated. Remember, 2 to 3% is the average. We'll probably stay anywhere from double that, 4 to 6% next year, year and a half, 2 years probably.
Yeah, and you got to think, Leon and I are 45 years old. And I remember when we started driving, I think we both were there for each other's driving test. And his mom or dad in the Taurus way back when while he took his test. And I know he was with my mom in whatever car I think Camry, when I took my test in Landover. And gas when we left was 97 cents a gallon. And I remember we were so excited because we used to go to this one gas station that didn't break $1. It never broke $1. So we always went there because it was like 97 cents a gallon. It's you're talking about 4.30 right now. So if you think gas prices are going to go backwards, go. If anybody wants to go find that 97-cent gas, please let us know where it is.
Right.
I'm not stupid. I'll go if it's a deal. So just understand it's important that you start using your money to make more money because it's not going anywhere. And someone say get used to inflation. Wow. Yeah, that's accurate.
Yeah, very much so. Yes.
You know what? The way we're going to get used to it is we're going to teach our money how to make us more money. And we hope that you join us on the journey. So we'll see you all next Wednesday. And we look forward to really providing as much information and value to you as we can. Some will listen, some won't, but we can always say we tried. All right.